All right, guys, weekend's over. Ready to get back to work tonight. Brand new week, brand new month. It's Monday evening. Time to get back after it. August the 2nd, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. And if you're watching for the first time tonight, it's great to have you with me. My job tonight is to help us find the best trade setups for tomorrow. That's Tuesday's trading session. I got a great video in store for you guys tonight. Charts are already in the background, as you can see. S&P's here, Nasdaq's here, gold is here. Get the whole crew back together here tonight. Glad to see you are right here, right along with me. But got a lot of great trades on our radar for tomorrow. Had that big drop off the high on the S&P. Not as dramatic on the Nasdaq. And I'll tell you, gold really has some nice shorts and maybe a reversal in store here for tomorrow. I'd love to short some of that S&P. The Nasdaq's going to be tricky. We're going to talk about the Nasdaq. Nasdaq looks like the S&P, but it's not the momentum isn't quite there. So we're buying low, we're selling high. We're going to use that range as a magnet on the Nasdaq. And I'll tell you, would love to short the gold right now, but that big pop we saw late in the day today could easily result in a 1, 2, 3 reversal and back up to those rollover highs from last week. Not to worry, by the end of this video tonight, you'll know my favorite price action setups for tomorrow. You'll also know some stuff to avoid to keep yourself out of trouble tomorrow, whether you're trading on your own or whether you're trading with us tomorrow in our trade room. Before we jump into the video tonight, though, as always, I just want to make sure to remind you, make sure you subscribe to our YouTube channel. Hit that little bell so you always get notified every time we publish something new. I publish this video newsletter, my best trade ideas every evening. I post these every day during the week. I don't want you to miss tomorrow night's video, so make sure you subscribe. If you have any questions for me, I would love to answer all your questions. Don't be scared. Drop those questions in the comment section below. And if you guys enjoy this video as much as I enjoy making it, do me a favor, hit that like button, that thumbs up here for me on this video. It really makes a big difference, help support this YouTube channel. So make sure you subscribe, right? Hit that subscribe button, drop those questions and thumbs up here on this video. But enough of the chit chat here. Let's get this video going. It's Tuesday right around the corner. And I'll tell you, for being it's the month of August, so we're definitely knee deep in the summertime season right now. But there appear to be some really good setups setting up here on these charts here tonight. Now, of course, really everything is a little bit bearish right now, right? S&P's very bearish. I would love to short that pop, that bounce on the S&P. We got some problems, though. That range is right smack in my sell zone here. So we're going to talk about tonight how to keep ourselves out of trouble inside that range. It should be a pretty easy trade, but it might not be as easy as we want it to be. So if you're a seller on the S&P, you definitely want to be looking at this. I'll also talk about how to trade this reversal on the S&P as well. Nasdaq you can see Nasdaq looks like the S&P, but it's not the same whatsoever. It's a ranged market. We don't have nearly as much momentum in the Nasdaq right now, so we're buying low, we're selling high, right? We're buying low, selling high, and really focused on trading that rotation until we see a breakout tomorrow. And tomorrow we definitely may see a breakout, so we'll talk about breakouts as well. And boy, I'd love to short this thing on gold, right? Gold that big move down last week right after that rollover spike. So big move down on gold. There's this monster channel up here. I would love to short this sucker back to those lows and take off the pendulum swing, but hello, look at the size of that pullback right now. That pullback is no joke. So we definitely have to be careful on the entry short, but you know me. I'll make sure you guys know exactly how to find the best entries in this stuff here if you trade on the gold or any of these markets here tomorrow. Speaking of tomorrow, let's make sure we're all on the same page here. Let's grab a look at the news calendar here for tomorrow. Tomorrow, of course, is a Tuesday. This is going to be kind of the lightest news day of the week this week. You'll notice all we really have is that factory orders number at 10 o'clock Eastern time. And based on the blowout manufacturing numbers we just continue to see right now, I don't think anyone is expecting anything but another blowout factory orders number here tomorrow. There really isn't a lot of news to work with tomorrow. So, they've been talking about this infrastructure bill, this new infrastructure bill coming in from the House. It was approved last week. They're talking about maybe a vote this week. obviously I wouldn't hold your breath on that, but that's something that might shake up these markets here for tomorrow. Everyone's watching the COVID numbers right now. I don't want to, pump fear into this video right now, right? But that is something that may kind of flare up. I saw headlines today about a whole city in China being locked down, right, for a COVID outbreak. I know. I'm not sure the market's going to react that much to that stuff, but those are some things we're kind of watching here, kind of bubbling around in the just below the surface here right now. Really, though, without any major news for tomorrow, we know the opening bell at 9:30 is going to be a big milestone, and usually, especially summertime months, that time between 9:45 and 10:45. If you're with me in my trade room, right? I always tell you guys, if you could only be there for 1 hour every day right now, summertime season, no major catalyst on the schedule. It's definitely that 9:45 to 10:45 block for tomorrow. And we'll see if we get any of those updates regarding COVID numbers or, right, any updates regarding that infrastructure bill that they're, trying to push through Congress right now. Don't forget tomorrow morning, 8 o'clock Eastern time, right? We'll get all prepped up and we'll be looking for trades throughout the entire morning tomorrow morning. But again, looking at no news tomorrow, 9:40 to 10:45. Probably going to be where you get the best entry setups tomorrow morning in the U.S. morning session. I would love to have you there trading right along with me. Don't forget, we trade together every morning, 8 o'clock Eastern time in our trade room. You got to be a member. I'll put all the info you guys need below this video on our blog, on our website, or the description of this YouTube video. Grab that link, get registered. We got a bunch of great specials going on right now for the month of August. So call the office if you have any questions about that. But let's get back to our charts though. Right? No major news in the schedule for tomorrow. Got a lot of news later on this week. We'll kind of catch up on that later on in these videos this week here. S&P's bearish. Nasdaq is bearish. Gold is kind of a wannabe bear right now. Let's jump first into the S&P tonight. We'll jump into the S&P first here. What I'll do is, as always, I'll put some chapters at the bottom of this video. So when you want to come back tomorrow and go right into where you want to get to, right? A lot of folks will use this video as a reference point the following day. So you can use those chapters, make it easy to go right back to the market that you want to be trading for tomorrow. Let's jump into it though. On the S&P, what do we know is going on right now? Well, there's a couple main components here. I think the biggest component is this range, right? This is the same range, pretty much same range from last week, right? Range-bound markets, of course, are balanced, right? The range acts like a magnet. And when you have a big range right in the middle of this chart, right? Levels of support will get bought, right? Levels of resistance will get sold, right? We'll kind of talk more about that here as we go. But that's the general idea of a range market, is to find levels of support below the range, right? And buy off levels of support, find levels of resistance, right? Above the range, and sell off levels of resistance. That's the simplest way to think about this. The second kind of key component on this chart right now is definitely going to be the momentum that we have going on right now, right? This momentum is no joke. We have a very strong move down. It grinds lower. Sellers are, bears really haven't had any chance to sell high at this point. So we look at these in our trade. I look at one of these big strong moves as being a really good example of where sellers will most likely be trying to sell the next pullback. Anytime we see this much strength in one direction, we expect the next pullback to resistance is going to be sold, right? Now, what's basically happening right now is we've got this range. The market is crashing back down here right now, and with all that momentum, we're anticipating this thing will give us another leg, right, and take out that pendulum swing, right? See how we kind of mark up the size above, mark up the size below. There's a big bullseye right now, right on that 43.64 3/4. Got some support down there just below it, but that is definitely where those sellers want to go. So the range is a big magnet, and that's kind of a headache for us right now. But we have all of this momentum going lower, telling us we're going to probably see bears. It might not be easy for them, but they're going to try to sell this thing, and that's exactly where I'm looking to sell short here as well. So a lot of rotation off the high. I've got my levels of support and resistance just above below the range here, and my prime kind of sell zone is right here where I've got these lows marked up, the highs marked up. It's just a beautiful spot here right now, right, for a short up there. So the challenge, of course, is this range, right? That is the big challenge here on the S&P. It would make our job easier if they kept on grinding lower here and kind of finish off that pendulum swing. So we definitely have plenty of ways to short this. We just got to make sure we avoid the middle of that trading range. For example, one of my favorite trades in a scenario like this is you mark up that prior high and look for a trap, right, above that high, right? Like that's one of my favorite trades here. We call these two-try traps. Strong move down, shallow pullback, lower low in price, right? You basically just sell above that prior high as it lines up around the high of that channel. That is normally a really rock solid, almost guaranteed winning trade when you have all of this momentum going lower here. In this particular scenario, though, when I get up into those highs now, I now have to be concerned. The buyers are going to be trying to get a smaller pendulum, right? And try to rip this, kind of rotate back. And you know what I mean? We have a lot of bear momentum right now. But again, that range right in the middle is the biggest problem. So the way we kind of work around that problem is we let those buyers try twice. And that's basically what I'll be looking for tomorrow as we get that pullback. Let those buyers try once, let them try twice. And once I have those buyers kind of roped in on that, right? They're trying to push this thing higher here. Once I get them roped in, now I know where their stops are, and I can now target selling now into stop losses. And then one of my favorite follow-up trades is to grab that first pullback as it comes off, right, off that high, right? Again, it's basically what I call a failure pattern, right? These are price action patterns we use in our trade room. A failure pattern, it's called a two-try failure because the buyers are trying twice on this. And then we like to rope it over, right, and grab that pullback, right, on the way down. Now, I'll be honest, if the market was to go a little bit higher than that, right, up into this area, I would still be open-minded to that trade, right? Still look forward to it, right? So 1, 2, and then back down again. Now, if we do get the move going lower here, and you're going to see example of this in the gold in a moment, what I'll do is again, I like the failure a lot. Go up, buyers once, buyers twice. I like that failure, but oftentimes what will happen is when the market whips around like that, you can grab a trend line right off that low, mark up that high, and the kicker is you want to drill down to a faster time frame, right? I talked about those trap entries there, right? Traps and failures. What you want to do is drill down to a faster time frame, and then the two most common we use 4 different price action setups in our trade room. The two most common off those highs are traps and failures. Now keep in mind, this is a 7,000 tick chart. I'm not going to trade off that 7,000 tick chart, right? I'm going to drill down to a faster time frame. I'm not going to go over all the price action setups that we use in our trade room, but what I will do though is I'll go over all those smaller details in our quick start class. We have a great, like a shortcut course, right? I'll put a little pop up there for you in the upper right hand corner up there. If you haven't grabbed that quick start class, you definitely want to grab that because it'll walk you through how to determine the right market conditions, how to find support and resistance that works best in those conditions, and of course, how to time the entries properly using price action. We don't use indicators. Indicators are for rookies. If you're watching this video right now, welcome to the club, right? You're up the ladder here, right? So now you know better. No indicators. We'll go over the details of that, right, in that quick start class. So long story short, grab that link that popped up there, get registered, and I'll see you guys behind the scenes there on our quick start course. What if we push higher here? Right? Next big question I'm sure you've got is as we push higher here, when can I start to buy this market? As we go higher, when can I start to buy this, right? At what point can I buy this? You can buy this as soon as you see buyers pull back and jump off the moving average. right? As soon as those buyers, not the first pullback, but as soon as the buyers go up, pull back, and jump, once you see them jump off that moving average, we call these 1, 2, 3 reversals, then you can get aggressive, right? Mark up that high, mark up that low, and then again, you're going to drill down to a faster time frame. I'll go over all the details in that quick start class. And really one of the most common entries you'll get off that low is to get one of those failure into pullback combinations, right? Off of, if you imagine kind of drilling down right into that area right there, we oftentimes go just below the moving average, right? You get those failure pullback combinations. Again, think about right in that area there. That's what you're looking for here as we go, right? Drilling down to a faster time frame. And I'll tell you what time frames to use, and I'll go over all the smaller details in that quick start class, right? So targets, of course, up around to retest the high. Now, we may also, these are summertime markets. Summertime markets do get a bit crazy sometimes. If the market was, let's say, for example, let's say the market rips higher here and then keeps on grinding, right? So it never really pulls back and jumps, right? What's very common is you'll see a market just race higher, whatever, it doesn't matter why. And then we see this, right? Strong move up, shallow pullback, higher high in price. It's a very strong move, right? It's not like this one where it goes up, pulls back, right, and then jumps, right? That's a 1, 2, 3 pattern. 1, 2, 3, right? And then again, drill down by that one. This one is gonna go higher and keep on going, right? So now we go running higher. We see that shallow pullback again, that higher high in price. Okay, this is not the same as a pop up and buyers once, buyers twice, and back down again. Okay, it's a very different price action structure. So when you see this now, strong move up, right? That's the key. Shallow pullback drives all the buyers crazy because they want to get on that thing, and that higher high confirms the move. Now we know everybody wants in on that trap. Right? We call these in this case, a 2-try reversal, 2-try trap. It's basically bears once, bears twice, right? And a trap below that low, right? Make sure you understand the difference though between the 2-try trap and that 2-try failure, right? One has higher highs, the other one has lower highs, right? Most of the time, lower highs, right? As we go back down again. Target again, back up to retest those highs. Now, as we go lower, how do we sell it? How do we buy it? Selling it as we go lower actually will be the easier way to do it because you already have all this momentum. And so let's say, for example, we don't get that deep pullback, the 1, the 2, right? Let's say, for example, all we get is a pullback to the base of that range, right? Could I trade that? You could, but you want to wait for a trap. Right? Always want to wait for a shallow pullback, because in all reality, that channel might actually be like this. Let's face it. It could be a spike in channel. We may not get that big channel like I want to, right? We usually get the big channel, but we may not, right? So if we don't, and we kind of sit there and struggle for a while, this is a great short, right? It's a great short. It's a trap short, right? Trap entry. But again, you gotta look for traps because you don't want to sell too low in that situation, right? So if we don't get that pullback, right? Trap entry, shallow pullback, or as we go lower, strong move down, shallow pullback, lower low in price. And then what you want to do there is mark up that high, find that new channel now off those lows. See where I'm going with this, right? Bingo. Trap off the high. Buyers try to get long off the moving average. We've got our failure into pullback combination, right? Now, again, if all these terms are going way over your head right now, if none of this makes any sense, I make this so much easier to understand when you grab that quick start class in the upper right-hand corner. So, don't wait too long on that. It'll make everything easier on this video. Trap, right? Failure, and again, pullback combination, right, as we go. We may also see something where it takes out those lows, right? Let's say it really blasts lower, right? Takes out that big low here, and then we see a bounce, right? Then it bounces hard. Let it bounce. Let those buyers try to buy the pullback and sell right into those stop losses. Remember, if you have all of that momentum, there's a good chance that the minute it does pull back, everyone's going to sell into it, right? So wait for it to bounce, wait for the buyers to get into it, and short right back into those stop losses, right? And again, we'll be keeping an eye on new channels, right, as we go lower. All right, how do I buy down here? What's the key to buy around these lows, right? 'Cause a lot of momentum, right? So let's say I find myself down around these lows. Okay, how do I buy down here? What's the problem? The problem is not location. The problem is momentum. In fact, these lows, this 64 3/4 is a really great spot to get long down here. So I would love to buy down here. But what's the problem, right? The problem is momentum. So look back here, what happened back here, right? Look back there. Is that strong move down? Look what happened. See how the bears fight for it right there? See them? Right there, right? Strong move down. Look, bears once, bears twice. What do we call that? Two-try failure. Okay, that's exactly what you want to see over here. We take out that low. We don't try to pick the bottom, right? Because that's a lot of momentum, right? What do? We wait for the bears to try a couple times, and we buy into those stop losses, right? Same thing up here. See how they go running higher? They blast higher. What happens? Buyers try once. Buyers try twice. Look out below, right? Two-try failure. Same basic idea, right? At these lows here for tomorrow. Now, it really could be anywhere down in this area. In fact, it could be right now, to be honest with you. I'd like to get this down in that low. I'd like to get, if I zoom in a bit closer on this, let me kind of show you some more here. Let's say we take out that low. Let's say those bears come in. They try once, right? They try twice now. Now we know all their pain, right, is right there, right? That's where the white flag gets raised. That's where the bears go, Uncle, I'm done. Get me out, right? So all their stops are sitting right there. We're at a major area of support. No, I'm not going to try to pick the bottom, but once I see those bears commit a couple times, there's a lot of variations of this trade. You could mark that trend line, buy off that trend line, right? That's my favorite. Find that trend line. You can buy into stops like that. It all works. And remember, one of my favorite follow-ups after this, right, is to mark up a new channel, find a new channel off that high, find that low, and then trade the turn, right? Trade the turn. Again, we're not going to trade this off a 7,000 tick chart like we're doing right now, like we're watching right now. We're going to drill down, and again, you'll learn these setups in the quick start class, right? The free quick start class. But we'll drill down, find those failures, those traps, those pullback combinations, and of course, we're going back up right into that trading range. All right, guys, there will undoubtedly be more opportunities than what I'm talking about here tonight, but I'm covering the basics here. If you want to get the whole rundown, make sure you come out and see us tomorrow morning, every morning, 8 o'clock Eastern time in our trade room. Let's keep going, though. Let's keep going. How about some Nasdaq here for tomorrow? Now, I talked about how the Nasdaq is similar to the S&P, right? There's one very big similarity here to the S&P right now, and that is the Nasdaq is range bound, right? Big range right there in the middle of this chart. So we know that range is a magnet. This is a pretty wide range, right? You'll notice it's a pretty wide trading range. Now, wide trading ranges always tell us to let them try twice. Okay, that is always my motto whenever I see a relatively wide trading range. Now, how do we know it's a wide range? You know, what's the definition of a wide range? We're going to go over more details of all this stuff in the video classes, but just rest assured, this is a wide range, right? It's not a narrow range, it's a wide range. Now, wide ranges are good in the sense that we don't need a very big breakout to get a good risk-reward ratio, right? So I can literally buy right around the edge, and I can still get a pretty good risk-reward ratio, right? You can't get that in a narrow range, right? You can't buy the very edge of a range, most ranges, and still get a good risk-reward ratio, right? So you'll see traders, they'll trade right around the edges, right, of these ranges, because again, you can get a good risk-reward ratio, right? That's one benefit of a wide range. The downside to a wide range is that the wider it is, the more momentum can turn back and forth. And that momentum tells me, let them try twice. So the kind of the key takeaways of this is wide ranges are nice in the sense that you don't have to get much of a breakout, right? You can literally trade the edges. But like this example, you want to make sure you give them 2 tries because the width of the range allows momentum to build, right? So as they go lower, it's bears once, it's bears twice, and back up, right? We go up, it's bulls once, bulls twice, back down. We go down, it's bears once, it's bears twice. Let them try twice, right? So we're trading the edges, and we're letting the 2-try rule do all the work for us. Now you'll notice, right, I marked up this channel. this is the same type of channel that we just talked about on the S&P, right? S&P is that, I got rid of it here just for illustration, right? But the S&P has that big, beautiful, right, channel up overhead. The S&P has all of that momentum. So, of course, I want to sell the high of that channel. We don't have that on the Nasdaq. The Nasdaq, yeah, it does. It's got a little bit, right? But this is definitely not inspiring me to want to sell this sucker short. So this channel is really just to be kind of an example for you to see that, look, it's definitely, it's similar in some ways, but it's very different in a lot of ways here on this, right, on this Nasdaq. You can also see, too, what a measured move, right, 1 and 2 legs right there. Our job tomorrow is to basically keep on using those 2 try failures around the edges, keep trading the edges and keep going right back into that range. And then eventually what's going to happen is we're going to see a breakout. Eventually, one of these big moves up will hold and keep going. Eventually, one of those big moves down will hold and keep going, right? Eventually, it'll break up, it'll hold, and it will break out of that range. Until that happens, buy low, sell high, right, and avoid the middle. So how do we do that? Again, 2 try rule. As we go lower, right, waiting for bears once, bears twice. Now, we saw a great example over here where they took it lower. The bears went once, twice, and see how they went just below that prior low? Those are always the best ones. Those are the traps, right? Lots of different ways these will show up. Sometimes they show up and they go 1, 2, like that, right? And you don't get that trap. If you can get the trap, though, that's where the money is, right? The traps are always the best ones just because you get in so much lower, right? And the lower you can get in this example, right, the better your risk-reward ratio is going to be. So as we go, right, as we go lower, trying to take out that pendulum swing, bears try once, bears try twice. We're buying it back up into that trading range. Now, unlike the S&P, where there's a lot of momentum going on, right, I'm not going to come in now and try to buy that next pullback, right, because momentum isn't there yet. What I'll do is I'll wait for it to go up, right, take out some of these levels of, there should be a trend line up here, sorry, right, take out that trend line up there, right, get to a resistance level overhead. Remember, that's the key. Just get up to resistance overhead, up into resistance, right? Wait for that pullback. Buyers try once, buyers try twice, right? And we're selling back down into that trading range. And then, well, again, if we can get these buyers to hold, right? Let's say, for example, right, we get the strong move down. Let's say the bears hold, right? And they really jump off the moving average. They haven't done so already. They haven't done yet. And they, by the way, they didn't do it all week last week either. Maybe not all week. Yeah, okay, all week last week, right? Going lower here, right? So if they are able to hold this, right? If they are able to hold that and go, right? What do you do in that situation? You mark up that low, you mark up that high. All of that momentum says what? There's a good chance the next pullback is going to be sold. Again, we drill down to a faster time frame. This is the 4,000 tick chart. We're not going to trade off the 4,000 tick chart. We'll find a faster time frame tomorrow morning. I cover all the smaller details of what time frames to use, the price action setups, trigger the entries. I cover all that stuff in that quick start class, right? Linked up in the upper right-hand corner. And then again, we're finding those, usually it's traps, failures off the high, right, of that channel. Where are our targets as we go lower here? Big, juicy target, 14,818 as we go. Let's say the bears get really spooked and they run that thing going lower. Keep your eyes on those 2 try traps. Strong move down, shallow pullback, right? Trap high. These will always be kind of my bread and butter whenever we have a real strong move in one direction. It could happen here. It could happen here. It really doesn't matter to me where we are. If we have enough momentum and I get a good pattern, right? Even if this thing was to run all the way down, right, and then pull back, I would still want that trade short, just because, again, right, when you have enough momentum, it may not go forever from there, right, but it will at least give you that first target, take that risk off, right, and hold on for a bigger trade as we go. As we go higher here, same basic idea, right? As we pop back up, The buyers come over. If they can hold that pullback and go, now I got to break out. Mark up that high, mark up that low, drill down to a faster time frame, right, and grab that entry. Now, if this happens to pull back after we retest, right, that 15,084, which I believe is the all-time high right now, right? That's the all-time high, I believe. Nope, never mind. All the way up top there. Forget that. Tough to keep track of all the new all-time highs these days, isn't it? Let's say, for example, though, strong move up, right? Shallow pullback, or pullback and blast, right? Again, it is scary to buy into those highs up there, but if you have that 1, 2, 3 breakout, just simply get underneath the moving average, grab those traps, those failures, right? Grab those pullback combinations. Again, we'll show you more examples of this. I have hundreds of examples of these setups, right, in that quick start class. So again, failures, pullback combinations, right? Maybe we get lucky and grab it off the low of that, right? Of that trend line right there. Easy trade, right? Easy trade. And if something really spooks it, we really get that strong run higher, right? Strong move up, shallow pullback, higher high again, right? This could be probably not going to be down here, right? It'll probably be up here, right? Above that trend line. That would be a good kind of rule of thumb tomorrow of enough strength, right? If we were able to get that move to really push through that trend line, right? That'd be enough momentum there to grab that trap right below that low. All right, guys. So got some pretty good trades on the Nasdaq here for tomorrow. Trade the edges. Remember, 2 tries. Trade the edges, 2 tries, and we'll see get a breakout tomorrow on the NQ. Moving on. Let's grab some gold here, shall we? Wrapping things up here tonight on the gold. As I mentioned in the intro here today, would love to short this thing on the gold, but I mean, look at the size of this pullback. I mean, look at the strength of that break higher here. Now, of course, main components right now, right? The main component, or there's a couple main components. I think there's 3 main components on this chart right now. One is that big strong move down last week. Okay, why is it important? Well, because anytime we see a real strong move in one direction, we know the pullback is likely going to be sold, right? This particular pullback is pretty cool because you can draw a trend line off that low, off that high, and we're right there, right? I didn't bother to put that channel in here because the channel is really not necessary right now. But that is, I mean, that's a pretty good spot to sell short up there. Again, strong bear move down gives all those bears, right? There's a big magnet, big bullseye right on that low, right? At 1808.2. Big bullseye right on that low. The bears would love to go back right down to those lows here for tomorrow. The second component is the range. You can easily see this market all chopped up, right? Down, going sideways. That is a magnet, right? That's another reason to want to sell short. So we have that strong move down and we're up. The magnet, right, wants to be used as a magnet below us. Now remember too, the amount we go above the range can be projected now as a target down below. So 1800, right, which we haven't seen since rollover middle of last week, I believe it was. 1800 now could easily be within striking distance here tomorrow, right, or Wednesday's trading session. So 1800, 1799 down there. Those are all some pretty good levels of support and some pretty good targets here for the bears. The big one, though, right, the big clue, the big third piece of this puzzle is this, again, a strong move going higher. Anytime I see a strong move, I call them kind of breakaway moves, right? They separate away from the moving average. They break away. Anytime I see a breakaway move that hasn't retested, there's a big magnet, right? I call them open loops. It's kind of a metaphor, right? Like unfinished business, right? It's an open loop that wants to be closed. So strong move goes up, right? Those buyers, I mean, think about it. This is just like those 2 try traps, isn't it? Right? Isn't that 2 try trap right there? I mean, come on. If you're a buyer, well, I mean, I guess if for some reason you didn't see this big move down, you didn't see the range, right? If you were just looking at this right here, if you didn't have any more data on your chart and all you saw was that, right, that big pop higher, right, you would think everyone wants to buy that, right? Buy that trap. That's going to be the key to our success here for tomorrow. I want to be a seller. I want to go back into this range. I am definitely open-minded for a buy side, but right now the buyers, they have to show us they mean business. How would I sell this right now? Well, first of all, I would love to see these buyers get just underneath that low. In all reality, if I can get the buyers to try once, if I can get those buyers to try twice, what I would love to get on this is draw a trend line off that low, a trend line off that high, and short that channel. Like, that would be the best possible short we have right now, because again, it's a very strong move up, right? This is nothing more than a 2-try failure. Right, but I put a little more protection on there, right? Getting that trap, getting that channel, right? I mean, that would be the ideal entry here. Buyers are trying twice, right? And again, you're anticipating the bulls are going to come in, try to eat our lunch, right? And we'll just sell right into their stops as we go. Now, another thing to keep in mind too is, and I've got this channel right here, right? This channel right there is there as kind of a placeholder for me to remind you that if we do end up, right, running lower here, if we do end up running lower, we don't get that entry, oftentimes what will happen is draw a trend line there, trap there, right, and there's your short from there, okay? Sometimes in the trade room, we'll get lucky, right, and we'll get that up, the buyers once, twice, we'll get the short going down, right, off that 2-try failure, and then we can grab it on this one and short the turn, right? Trade the turn on the way down, right? So we'll see which one we get. Maybe we get lucky, get both of them tomorrow. You know, my job is take whatever the market gives me, and that would be a great trade, right, going short, right? We turn the momentum around, okay? But now, of course, I don't want to sell way down there because now I'm selling to those lows. And so what do? You find that new channel, and you pull the trigger short off the top, right, of that channel. Hopefully we get that trap. Sometimes you don't. Sometimes what will happen is the market will just, sink like a rock. And then what you'll do is you'll grab that right there. And in that situation, you want to get them up, get the buyers committed, let them buy off that moving average. Their stops are a sit and duck right there now. You can sell right into those stop losses. Same basic idea, right? Just different price action entry setup. All right, guys. And again, I know I'm repeating this again, but we don't want to wait for indicators on that. Use the price action. I go over all the price action setups, right, in that quick start class in the upper right-hand corner. All right, as we're going lower here, right? As we're going lower, well, let's do this. How do we buy this market? What would it take to get long up here? Right, we'll talk about the do down here a little bit later on. How do we buy this market going higher right now? The buyers have everything they need to take control of this market. They have a strong move up. They have a level of support. I mean, you could probably draw a channel off that high, channel off, right? I mean, come on. You have everything you need right now, buyers, right? No excuses. So if the buyers can hold that pullback and jump, bingo, this is a reversal pretty quickly, right? Mark up that high, mark up that low, drill down to your faster time frame. We're finding traps, we're finding failures, we're finding pullback combinations, right? You'll learn those price action setups in the quick start class. Where's our target going to be though, right? As we go higher here, the target's pretty simple, right? Get that big rollover high up there. That does seem like a lot to ask for tomorrow, but hey, it's gold we're talking about. Gold could easily make, it's only a 20-point move, right? Yeah, 18 to 20 point. I mean, that's a breeze for a market like gold. So that's definitely achievable here for tomorrow. So we'll definitely keep an eye on that. And then don't forget, if it rips higher, right? If it really rips high, you know what I mean? If it really rips higher like that, just simply mark up those traps, right? And grab those traps. Right? And you'll know what I mean, right? It'll really race. It'll really accelerate. It'll really run hard. So the buyers will have it, right? It'll really jump up, shallow pullback, right? High in price. Don't worry. The channel's great. You don't need the channel. Channels are great to have, right? You definitely get extra bonus points for putting a channel on there and having that channel low. But just remember, though, if you have enough strength going higher, everybody's going to want that trap on the way back up. Again, 1834, 1835 area up there overhead. All right, as we go lower here, right? As we go lower, these are the types of scenarios that can really run, right? Because you get all these bears up here, right, getting short, all the buyers trying to get long, and sometimes this thing will just rip and just roll lower here. So if we do just really start to run, right, if it really starts to run, you know where the market wants to go, right? It wants to get back to that pendulum swing, the 1800. If it really starts to run going lower, grab those traps. Right? Grab those traps. Traps will definitely be on our radar if the market really starts screaming lower. Again, it could be here. It could be a little bit lower too. Just grab that, right? Grab that trap there. Also, too, once we find our way down here, which could also be a 1, 2, 3 reversal, mark up that low. Again, remember, don't worry about where you are. If you have enough momentum, your job is to sell short off that first pullback, right? And I say pullback, right? We're not using pullbacks very much off the top of that channel, right? The traps, they're failures, right? You want to go just above the moving average, and I'll teach you the techniques, right, in that quick start class. But that's a great short too. What if we find our way down at these lows? Can I buy down here? You definitely can. What's the problem though? Momentum, right? Momentum. I don't care if I'm at support. We're too bearish to want to buy. So what do? You wait for exhaustion. The easiest way to find exhaustion is let them try twice. Let them try once off the low. Let them try twice. Once those bears try a couple times, right, those stops are sitting right above the high. I can buy into stops. And then, of course, I can trade the turn, right? I can buy that first pullback, right, off of that low, right? So bears once, bears twice. We're at a major turning point, right? We don't just pick reversals in the middle of nowhere, right? We trade the turn at a major turning point. Bears try once, bears try twice. Stops are sitting right above that high. Again, one of my favorites is that trend line, right? Buy off that trend line, buy into stops, and again, drill down to a faster time frame and buy that first pullback for that rotation going back up into that range again. Right? Again, should be a pretty good day here on all these markets here for tomorrow. The Nasdaq is definitely the one that has to kind of pick up the pace a little bit right now. But you know, it's a range. We'll keep buying low, we'll keep selling high, and we'll keep avoiding that middle. What'd you think? Right, how about a like on the video tonight? I hope you subscribe to our video, and I hope I'll see you tomorrow at the opening bell in our trade room. Don't forget, every morning, Monday through Friday, 8 o'clock Eastern time, we trade this stuff together. It's so much easier to do this the right way the first time when you got someone to look over their shoulder and do it the right way every time. So grab that button. I'll put all the information, guys, below this video tonight on the website. I'll put in the description of the YouTube video. Don't be afraid to call the office if you guys have any questions along the way. We got some great specials going on for the month of August, so definitely don't be afraid to call the office and get more information on that. We got live chat on the left. We got live chat on the right. You can always drop those questions in the comment section below. But that's it for me tonight, guys. I've taken up way too much of your valuable time. Hope you all enjoyed the summertime weekend. Got a big week ahead of us here. More big news coming later on this week. We are just getting this party going here this first week of the month of August. Now get out of here. Enjoy the rest of your evening. Rest up. It's going to be a busy day tomorrow morning in our trade room. Hopefully I'll see you there with me. If not, I'll see you back tomorrow night on Tuesday's edition of our nightly newsletter. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.